Hello everybody, I'm your host Emily McFarlane. Today we've got a very special guest here. We have Adam Vise. Welcome Adam.
Thanks Em. How are you?
I'm great, how are you?
I'm really excited to be doing this. This is something a bit new for me.
You look a little bit nervous.
I'm totally nervous.
Are you?
Yeah.
I'm quite an intimidating person, so completely understand.
Yeah, good, I'm glad.
So Adam, you're our chair at Birchal. I'd love to understand a little bit about what a chair does.
It's a really good question, and it's a bit of an evolving game. So at the start, I was there at the formation of Birchal and effectively needed an old guy that had been in securities industry because it was a new business, but ultimately it's also a bit of an old business model as well. So I joined and have responsibility as a responsible manager. And so Matt and the team effectively needed a director that actually had the old experience and actually was required to get the license from ASIC. Post that was just as a normal director, and then over time we realised that you've got an executive director with the founders, and then you've got someone who's actually just doing a part-time job helping, overseeing, sort of making sure the business is running as we expect, and then actually start to help drive the direction of the company and help support the founder as he tries to work out the best way forward.
Yeah, right. So has your time at Birchal, obviously when you began, it was just getting off its feet. It was in 2018. The regime in itself, crowdsource funding, had just begun. What do you think has changed significantly in terms of your role from then versus now?
It's interesting, not that much. Like ultimately we help companies raise money and we have to be trusted by the crowd. And so it's really about making sure that we have a gatekeeper process which has good integrity to ensure that the offers that come to the crowd are actually robust and fair. And so really we've been doing that from day one. I guess the start was like, how do we do this well? How do we do it efficiently? And now we've got really pretty amazing team of talent that's actually doing it on a much bigger scale. You know, we're doing, I think in the first year we only did a couple of deals, and now we can do 100 in a year and probably more. And so it's really just been much more now about focusing on the talent, helping Matt find the team and actually retain the team and think about how do we get people in the right place and get the strategy really driving for growth.
So in terms of the industry, obviously you're saying there was 2 deals within the first year, and now you're looking at us launching up to 6-7 a week, which is pretty huge. What would you say the key difference is between the businesses that came about in the beginning versus the businesses you're seeing now?
It just gets more and more broad. But like all, it's sort of, again, capital markets goes in waves. So we started with a bunch of brewing companies, which probably wouldn't surprise you. And then we started to see some businesses in like medicinal marijuana. Then we were also seeing a lot of purposeful companies. And now, we see a lot of everything. We see a business that owns the copyright of a bunch of designs. We have a business that does C-bins. It's really much more about purpose. So the scope seems to expand, but I think it follows as the crowd gets a little bit smarter or a little bit more aware and learns about an industry and then really applies itself in that industry. And then other issuers go, oh, this is a great way for me to raise money. So it's a bit organic in the journey. You have inorganic moments where someone goes, this is a great application for my business. And then suddenly the crowd gets it, all their competitors get it, and then you'll get a wave of issuers. So I couldn't tell you how many breweries we've had since the first deal. I couldn't tell you how many medicinal marijuana businesses we've had since the first deal, but that's how capital markets work, is people work out this is a really good model for their business, and then you get more and more. So the scope just seems to keep broadening, and that's kind of the joy of it. It's sort of a very zeitgeist kind of thing, right? You just don't know what's coming next. The beautiful thing about the crowd is it's pretty broad. It's really the community of the businesses, so it really can support anyone and everything. And so that's been the magic of it, is every week we could see something completely different.
Yeah, 100%. What do you think is the most exciting industry that's around at the moment that's, really hot in the capital raising world?
Well, obviously plant-based medicine is huge. The TGA has been very supportive of people being adaptive and trying regimes and adapting how people might treat mental health issues. I think I've got another hat. I've got a side. My main executive role is in a place called Australian Unity that's a private health insurer, and we can see the scope of the need for health and care emerging challenges in Australia and the provision of that, and to see over in Birchal all of these businesses that are actually finding a new way to do medicine that actually changes outcomes materially for people is really exciting, and I think that's a really big strength. I think the other one is purposeful capital. People think about capitalism as sort of innately about just driving for profit, but what we're seeing on Birchal is a lot more businesses that are they do something which achieves a goal for the supporter or the investor that's beyond just profit. So they're actually like social enterprises that they're profit seeking, but they're also got a deeper purpose. So they're aligning to their community that want to support in them. And it's not like charities, they're actually trying to build business models at scale. So I think that's my more exciting piece. I think that's what we'll see more of as well. It's sort of a really good natural place for communities to get together and build businesses.
Yeah, 100%. I think obviously one of the values at Birchal is community. And I think we talk about it every single day, is how can we get the community involved? And what you spoke about before is that investors are getting smarter, they're learning more. Do you still feel like there's a bit of a gap in their education and people understanding what equity crowdfunding is? I mean, I know when I'm at the pub and somebody asks, what do you do? I say I work for an equity crowdfunding platform. People say, what is that?
Yeah, there's a huge, this is a very long journey. I think in my conversations with Matt, we actually think about this as a sort of a beginning of a brand new asset class. Maybe not as big as housing, but in the 50s, people forget that housing wasn't a normal, like people didn't always want to own a house. And then Robert Menzies, we did a bit of backwards research, and it's like there was about 3 or 4 major policy initiatives of government to encourage people to build and own their own home.
Okay.
Go forward 70 years, it's now impossible to own a home because everyone owns a home, everyone's been paying more and more for a home because the asset class has become really solidified.
Right.
And that's driven Australian economic growth. Now, the challenge is in a world of creative ideas, what's the equivalent today? What's the opportunity? And I think there's this really, this potential of creating enterprises like building homes that actually the millennial generation, who are the most creative, who are the best educated Australians ever, to actually go away and build businesses and to make something of value longer term. We need perhaps a little bit more government support like Menzies did 70 years ago on housing, but I think that has the scope to really transform how big this ecosystem can be, because capitalism always was, or original shareholder companies were a group of community getting together, supporting a business they thought had common good.
Right.
And, the ability of community, whether it be a family who's supporting their son or daughter who may have a hairdresser's and they believe that they should have 2, like why can't those people have access to a company-like structure and a capital raising-like structure? Like IPOs or share ASX, where on a much smaller scale. And I think that's the potential of crowdfunding. As the community gets a little bit more sophisticated, experiences more investments, starts to work out what they should be looking for, starts to work out, just having the experience of putting $100 or $200 or $500 into an investment and seeing if it works or fails, just changes the nature of the crowd. And at the same time, probably starts to inspire the young Australians going, what can I do that might make a difference?
Yeah, right.
And they're learning from other founders going, how do I build a business? And so you kind of build 2 sides of the street at the same time. And so you get a deeper experience on the investors, you get a deeper understanding of what it takes to be successful on the business side. And actually they start to feed each other. Like ultimately a really good community will be helping the founder grow the business. So it's really, really early. Like we what do we raise? About 100, maybe $200 million almost now.
We are very, very close to 200 mil.
So that's not the housing stock of Australia. Like we are at the very beginning. But if the run rate picks up and if young Australians want to create wealth, they're not going to be able to do it by housing. They're going to do it, our parents may have built a house or, saved, or actually a lot of people build houses, and that's how they can create intergenerational wealth. What are the millennials going to do? You can build businesses.
Yeah. It's a really good point. I mean, as someone who doesn't own a house and probably never will, thinking about a business and venturing into that and venturing into the business of people who are starting at such an early stage is really, really exciting because it's an opportunity we haven't had before. Sure, you could go on the ASX and I can put a few $100s into Qantas. Where's that going to go? And do I feel the same emotional connection to that brand, to that company as they're growing and going forward? I think that that's the beauty of equity crowdfunding is you feel that connection with somebody who you can actually relate to.
Yeah, and the listed companies, when you go to the ASX, it's really deep in the process of the company. Typically, people won't go to the listed market until they have run out of growth.
Yeah, right.
Like the price on the ASX for growth is really modest. So ultimately, people who are growing at 50% don't often get a really high valuation. So people keep the business private. So there's this. You will never get the exposure to the creation of Qantas on the ASX. And people are working that out. Like the ASX is on average, I think the expected return of equities is like 8% per annum. That's not going to change your life. You can't get much leverage compared to a house. Like houses have gone up maybe 5 or 6 or 7%, but you can get so much leverage because of bank debt.
Yeah,
Whereas
right.
you're not going to change your life by owning Qantas shares. But you work at Birchal, you participate there, you're helping all these other companies. My hope is that you are forming and helping seed all of these businesses. And probably at some stage we see people at Birchal come through and go, I want to do this myself, as well as helping them directly. So hopefully we see you create a lot of value at Birchal and hopefully help create this ecosystem. And I think it's actually, you're right in the middle of hopefully what might be a really massive wealth generation opportunity.
Yeah, I hope so too. And I think at the same time, obviously, educating people on what equity crowdfunding is, on shares that are currently illiquid. There's not a trading platform for this class of shares. It's hard. We're all getting there and everything. But what do you think are the biggest misconceptions around equity crowdfunding?
I think the first one is, will this generate me a return?
Mm-hmm.
And until we get a few exits, we can't say or prove it. So the first one is investing in illiquid assets like this where there's no market, there's not really many opportunities to exit, if any at all, is this a sensible place to park your money? And so until we get some evidence of success, this is going to be number one challenge. I think the second challenge is, and this is one which we're really leaning into, is how do we create moments of liquidity, whether it be for founders or for investors? And the ASX is probably not the answer for most, because the ASX, you have liquidity literally from 10 a.m. to 4 p.m. every minute, every second of each business day. So you need to be working to ensure that there is a buyer for every seller of every share. Like that's a distraction for a business that might be trying to, double its revenue over the course of the year. So I don't think we really want to encourage investors having that expectation that there's a pathway to listed, traded, everyday liquidity, because your expected return should fall because you suddenly de-risked the whole investment proposition and you've distracted management, so you're not going to expect return. And so I think the opportunity is for us to think about creating windows and use our crowdfunding platform to create liquidity opportunities. Now, we have done it once or twice. We've got Birchal Trade, and I think we've got a whole packet of ideas on how we can bring the equity crowdfunding mentality of creating a crowd, creating expressions of interest and bringing that to the market. And I think that's a really exciting opportunity, whether it be for people who've done crowdfunding or even for other businesses more generally. I think we have solved a really big problem in terms of bringing community into companies and actually creating mechanisms. At the moment, it's all primary issue in equity crowdfunding, but I think that's what is next. We probably need to create some liquidity windows for the investors that have got on board, and also for founders, or businesses that are already mature. Maybe there's an opportunity here for businesses as they get more mature. Maybe it doesn't need necessarily just to be a startup. like businesses that are actually going really well. They're not really thinking about listing, but they actually wouldn't mind raising a little bit of extra money and just keep ticking over and generating a salary. Like more mature businesses can use this. So it's just getting more transparency into the trade, into a market where we get opportunities for people to buy and sell the shares.
Yeah, absolutely. I mean, you talk to not a lot of examples of liquidity events and exit events in Australia. This kind of market has been around in the US and the UK for a while. Can you talk to any examples of where shareholders who got in really, really early were able to see some huge returns on their investment?
Not by name, but yes, we know in the UK there has been some absolutely stellar exits. And in the US, we've seen some of our businesses come back who haven't generated an exit yet, but they've had revenue growth of 1,000% in a couple of years. So those businesses are growing really quickly, and when they do have an exit, I think there's evidence there that they will really generate quite a lot of shareholder value. We know in the UK when there was, and I can't remember which one it was certainly some of the pub businesses went really well. We know at Crowdcube that when they did that, suddenly the investor universe turned on. They realised that there were some people who had worked out what worked and didn't work, and they started to follow on and actually start to see it as an investment class. So we know it happens. We know what have we done, about a couple of hundred?
250.
250.
Actually, I take it back. We're at 252 closed deals now.
We know of the 252. Not many of them are going to, go 5 or 10 times, but we know that some of them are generating revenue growth well in advance of multiple, 10 times what they started at. So there will be exits. It's just a question of when. And one of the challenges is the IPO market is pretty shut. So if their exit is going to be towards public markets, that's not necessarily an easy pathway. We've had 2 or 3 that have got really close, and a few into takeovers and or been supported by VC as they've scaled up as well. There's so many live firing things that are almost ready to happen. Public markets are slow. Invariably means the turnover of exits slows. So this typically is also the window in the market where it tends to reduce. But if we look at VC, because they can't get any exits, they've got no pathway, they're really slowing down on their capital injection. Whereas in the crowd, the money's still going in. And this is probably going to be the best vintage. You've got businesses in slow environments, so anyone building anything that works today is probably going to be like the businesses that started popping out after 1999 with the tech crash. Like there's a series of businesses that created after the tech crash where they've just got such robust businesses to survive and get going. Invariably, this is a great time for money to be going in. So exits will come. IPO market's been slow, probably means there's not many other places to go to actually invest in these earlier stage businesses. So we're just going to have to be patient.
So when you talk about IPO as an exit strategy, what are some other exit strategies that you hope to see, or as an investor you would hope to see down the pathway?
So IPO being public market, go to the ASX. I'd like us to create opportunities where we have a more slow pathway of just creating liquidity events, of allowing share trading, periodically rather than every day. I think that's more founder friendly, more value accretive for the whole of the shareholder stack. So just capital raises where people can participate and sell down some of their securities. So we're seeing in the US a range of private markets evolve that actually allows for exits via, suddenly a sophisticated investor or a VC might go, I really want some more of this company, and start building a stake out of the pool of investors. Strategic takeover is invariably a really popular pathway. So a lot of these businesses are getting built in a way that sort of builds a technology or builds a business model that a big, more mature business can't imagine or can't really get the resources or the talent in place. And so it's a chance for them to regenerate by buying junior businesses. So that's really a trade sale or a takeout. And the other one is mergers. So we know that, for example, in the pub sector, we've seen a lot of pubs. We've also seen potentially a number of parties who've said maybe we should put some of these breweries together and build a portfolio of breweries. And when someone does that, they might actually have a pool of capital where they might actually look to buy some of the shares as well. So there's 1,000,001 ways for people to want to buy shares in a business, whether it's be for control or whether it be for public market. So it's endless, the possibilities. We just haven't seen too many of them yet.
Yeah, absolutely fair enough. And I think there's an inherent element of patience that investors need to take on board in this time. Something that I have been consumed, has been living rent-free in my head, is the juxtaposition between male and female founders and the money that's getting invested in female-founded companies versus male-founded companies, and particularly in the VC space. And something that we do at Birchal is really try to give a platform to these female founders and really shine a spotlight on these businesses, because sadly, a lot of the time equity crowdfunding is a last stage resort for funding for them. Why do you think that is?
It's such a great question. Is VC sort of a paradise of egomaniacs? I don't think it is, but bravado is really important for the power law.
Right.
So I think VCs have built a model that's preoccupied by the power law.
Sure.
And that was great when SaaS has had the greatest 20 years ever. And so that has been a brilliant formulation. But VC wasn't always just about software.
Yeah.
And I think that has meant that might have got a little bit more blokey.
Yeah, right.
And maybe I don't really know why in VC that has a propensity. In crowd, it's kind of the opposite. So one of the things we realised really early was Sheba Rideshare, and it was the power of the female network. So community, like if there is a difference in the sexes, I'm not sure if you can even posit that sort of theory anymore, so I'm probably get cancelled for this comment. But a lot of women are really great at creating community, really great at communication and building affinity. And so in Sheba Rideshare, the business ultimately didn't get there through COVID. Suddenly you couldn't go anywhere. So the idea of a female rideshare where the driver's female, so you always feel safe. It's a compelling proposition to an audience of women that fully understand the uniqueness of the proposition. And the founder just engaged women. And women have far as equal economic power as men. In fact, in households, typically women have a little bit more control of the purse strings. So we realised then that this is actually superpower. Like, women are so much better at creating community and creating energy from the community, and therefore hopefully raising money from the community. So I think that our strength will be we will support more women businesses than VC. I think that's just inevitable. Like, we don't have to change the formulation. It works. You know, you're out there. You've worked with some of the founders where I think many of the female founders are the most appreciative of us as well.
Definitely.
Maybe their expectations are low, but they are also very proactive listeners and take the advice and really tend to turn out really successful deals for the businesses they have. So I personally think that we are an equalising force. The truth is it's the community that decides, and communication's critical to our platform. Like, if you can create a community, you can communicate effectively with that community, then you can raise money. And I think these are common strengths in women founders. So I kind of hope that this will be one of the areas of extreme outperformance. But again, we just have to wait for that. But I certainly know that in a balance, I think we get far more women founders, and I encourage more of them. I think you've actually got a much better formulation to get more money, because you've got a community of people, a community of women that want to support each other.
Totally.
Yeah.
I think there's a little bit, from my experience anyway, I've noticed that there is a little bit less understanding of what equity crowdfunding is, and women tend to be a lot more risk averse. So therefore, they have a look at something like this. They say, "Oh, it's quite high risk. Should I be investing in such a thing?" But it's a really exciting opportunity, I think, for women to really take control of their wealth in the future, and actually make decisions on where it's going, and have these opportunities. And like you said, women actually are the main decision makers in the household about products in the household. This is something that actually, this statistic came to me the other week. I was working with Broad Radio's founder, Jo Stanley. So she founded Broad Radio because she realised there was a gap in the market for, radio that is made for women who will be the main purchasers in the household. Therefore, the advertising budget should be going towards that for household products, anything like that. And she has built this huge community, but she really struggled to raise capital. And then coming to us, it was such a breath of fresh air working with her. She was really inspirational, positive, had such great things to say. And like what you said, I gave her some advice. She'd take it every single time. It's just so beautiful to work with the female founders. And I know you see that all the time. What's been your favourite campaign in the last year, would you say?
It was good. It was great to see Jo. She's a school mum at the kids' school. And I remember when she formed the idea, because when she left radio and was thinking about where to go next, it was like the germ of an idea, and there's actually a group of mums who are supporting her in the school. Some very impressive women, and who are on her board or on her supporter board. And so I love that business because of that. And there was as you say, it's not risky. What's interesting is it feels hard, but we've cracked a formula where we give good advice. And so if you've got open founders, I remember that conversation we had with Jo, that what's the data say? And so we knew what we were jumping into. It wasn't an unknown pool. We've collected information from 1,000 people as to what their interest is. So we're able to give her really good guidance on what to do. And she listened to it. And invariably, the clients that listen to the data, not to us, but to our data, they are the best clients because they achieve success. It's not like a surprise. Like they just go really well. And so I like Jo. I really like Jo. I like all of them. This is like, who's your favourite child?
It's a thing. Parents always have a favourite child. So going back into it, what do you think are the key benefits of equity crowdfunding versus traditional funding?
Well, you get money.
Sure, we love that. Everyone loves a bit of money. It's always good.
I think the core benefit is you get money from people who believe in you. So you're not really, it's not a skeptic's game. So you've got alignment. And so a lot of people talk about, you'll have 1,000 shareholders. 1,000 shareholders, and some of them will only own $500 a share. Like, you are just getting used to being accountable to a community. If you're a great brand, you're accountable to the community. And what it does is it empowers your community to believe it's their brand. And I think that's the super magic, is you end up issuing shares which are future value to the people who will make your future value. So alignment's strong. They're most likely to be your advocates. They're most likely to spend money and drive sales. Like I know monkeys. I always, whenever I'm at Coles, I always buy another jar of the
beautiful peanut butter.
Yeah, correct.
Stunning.
It's because I believe I love the way he created the business and positioned it, and it's like, this is my peanut butter. It's magic, right? It may be the pistachio peanut butter, and I may have suggested a pistachio.
One might call it pistachio butter.
There's a you may well call it that, but it drives sales. So you buy a share, and you're probably going to spend some extra money in the revenue. So you are creating value. Like what VC for $1,000 then drives maybe $20 of revenue at the same time. And if 100%. Everyone's doing that, you are transforming the value of your company, and you're getting it to the people who believe in you. And so the
For
brand
sure.
becomes theirs. So I think the other one is the purpose stuff. So every company is trying to build an ESG formulation. Like we're trying to change. Every company is trying to change the world. All the monopolies are. I'm very moral. Morality has diversity, and so which morality do you believe in? And the beauty of crowdfunding is you actually can invest in the thing you believe in. And I think this is, we're in a world where religion's probably a little bit less important than it used to be. And it's one of my favourite topics is, and I think a lot of millennials believe in a lot of stuff. How do they express that belief? They're not going to church. How do they drive the outcomes that they want to and the changes they want to see? So they've got the ability to invest in businesses that are achieving their moral purpose as well as their financial goals. And to me, that's when it gets really exciting, because everyone thinks that capitalism's bad, or not everyone. A few people suggest it's got some, if it's just maximising profits and monopolies. And it's probably not great for society, but equally it's a perfect tool for creating enterprise, for achieving both profit and outcome. And if you achieve both, you actually scale. You actually can make a significant multiple impact on the purpose you're trying to achieve. And so crowdfunding allows for that community support. I think the other one is actually allows for smaller businesses or smaller communities. So businesses like breweries or pubs where the local community supports it. I think it's Yakandanda where we've got a power company that got, literally the local community build a power network for green power for their local community. So it's not for the SEC or one of the utilities. It's actually the local community ganging together and building a common infrastructure with shares in a company. So they're creating the value of their town. They're enhancing it and creating it. And I think those are use cases that are pretty transformative. And if you're just trying to raise money, it's actually really efficient. Like writing an offer document for us is not that hard. It's actually the Parliament has written regulations that mean it's 80% written. You just have to fill in the sections about what is your business and the risks and produce your accounts. So it's not any really much harder than just normal capital raising, but it gives you the discipline of having to write an offer document, which is a legal liability document, and actually forces you to be really clear about what you're going to do. So I think we find most companies, when they go through the process, come out the other end, sort of like in my olden days when I was in capital markets doing IPOs, the business would be exhausted. And we have clients that are exhausted, but they go, I've learned so much about myself and I've grown up. My business has become more mature and it's more robust with that self-examination. So I think these are many of the benefits. The other one is you can keep coming back. Everyone thinks you raise money once and you're done. How many businesses where we'll see a company come back year on year on year, they're showing they're getting their milestones, and then they're able to get more money, more money. So you don't have to raise $5 million. You can raise $500,000 if you do it year in, year out. And actually, it's a much more accountable model.
Totally.
So it just chunks it down. And the last one is it allows for your friends to have $500. You don't have to have everyone do $100,000. So it actually allows for a more fragmented community. Like you can actually allow for a lot more people to participate.
Yeah.
And it doesn't cost anything really to manage a modern register, particularly if those people are able to broadcast your story, drive your revenue and all the other things. So there doesn't seem to be a lot of downside. There seems to be a lot of potential upsides.
Yeah, 100%. I mean, for somebody who doesn't have $100,000 to put into a company, it's very valuable for me.
Yeah.
And I'm obviously Birchal's biggest fan, and I spot the companies all the time that have gone through the Birchal platform. I was at a recovery after a wedding the other day, went to grab a drink from the ice bucket. What do you know? Techni Ice. That was the S-Key. Fantastic company. I go to get a beer. The beer is actually from one of the breweries that we've raised funds for. You see it all the time, and it's so exciting, those companies. And then you think about the companies who are making a huge environmental difference. I mean, cassava bags is one of my favourites, and I think about them all the time. So those who aren't familiar with it, essentially it is what looks like a plastic bag. It's made out of cassava root and it dissolves in water after it's been immersed for 5 minutes. Such an incredible business model. They've come back to us twice now, so it's amazing to see what they've done. They've partnered with Bupa. They've, impacted so many people, so much of the environment, and we see this over and over, and I absolutely love it, obviously. And we're seeing heaps of them come forward now, which is really exciting.
Well, I think it's really interesting on the target market for millennials in particular, your generation as opposed to mine.
It's nice of you to say.
And it's the ability, these are not little brands. Like they're building real momentum because they've nailed the target market, which is the market that leads. If you want to grow into a big brand, you've got to get people who are sort of somewhere between 18 and 30 because their parents want to be like them. Their little brothers and sisters kind of aspire to them and they've got money. Mm-hmm. And so the game is, I think these business versus the Fosters and the Procter & Gamble's, they all rely on mass media and they don't know how to be authentic to the modern consumer. So, So the strength and the businesses we are seeing on the consumer side, I think are infinitely better because they know how to instigate genuine engagement with their community via social media based. It's like the social media has changed how the game works. So these businesses don't have to pay News Corp or Facebook tons and tons of dollars. They've got a natural audience that doesn't cost them anything because people are engaged about their authentic story. And so rather than having experts that are just big brand marketing spend, Procter & Gamble just spends so much money on television advertising, mass market, master brand kind of advertising. It's really expensive. So they burn, say, 10% of their revenue through that. Our businesses aren't spending any money. Not much. Maybe they're spending a little bit on digital marketing, but they're getting leverage. And so their superpower is they are displacing the need for this marketing spend because they're authentic. The social media networks mean that they need this content. And so they're better brands. So I think what we're seeing is people will see crowdfunded brands actually start to win because they are able to raise money because they're able to engage with the consumer.
Yeah, absolutely.
That was the original thesis in the original founders document. It was saying, we think this will source and provide extra alpha, like outperformance, long-term outperforming returns by investing in all of the crowdfunded consumer brands. We think that investors will do really well because, one, they're really good at digital marketing. Two, they're going to have customers that believe and support, and three, therefore, they're going to drive sales growth even faster. So your experience of loving your brands, I think, is the future, and I think that's actually going to be a really important touchstone for our business. Is actually we're at the start of the journey for a lot of very big and potentially important brands.
Yeah. I mean, looking forward to the future, where do you see equity crowdfunding in Australia in the next 5 years, say?
Who knows? I think it's going to be... Capital markets is really cyclical. It's interesting because the consumers had a hard year with interest rates last year, so the cost of living crisis. And so our volumes didn't go up. It went down a little tiny bit. Whereas the ASX market, VC market, all of those, they all halved. So the capital raising we're experiencing is growing. And invariably what happens in capital markets is there's periods of mass acceleration because people are holding back, the consumer may not have the capital, they don't believe the system or the environment's not supportive of going, yes, let's go for it. And when we started, we had a slow first year. Yeah. The second year, it went bananas because people go, this is my answer. And at the moment, there is no other answer. If you need capital, you can go to VC, but VC are protecting what they already invest, and we are here to help VC because we can follow along and support VC with consumer-based money directly into their businesses. And the IPO market's shut or virtually shut. So if you want money, like crowdfunding is a reliable, still open market. So there's a really good prospect of every young person or medium-sized person that's trying to build a business will start to pivot towards crowdfunding. So I think it just accelerates periodically. I think we'll see substantial acceleration at some point. I think that, people creating businesses, I think will accelerate. I think young people will go, I'm not going to own a house. I want to create some value. I want to use what I know. I want to, create a business from my idea. So, and I think the use case will start to expand as well, like intergenerational wealth. Like maybe it'll be about, people who want to take over their parents' business. I'll help, we'll get a crowd of people to help buy the business off dad, or mum.
Love it.
So I think we will see a acceleration. I'd like us to find a pathway with VC where we work together. I think we have the ability to bring direct consumer money into the businesses they're investing in. So I think there's this great opportunity of VC getting scale with their limited dollars that are left to ensure that they are funding their businesses properly.
Yeah.
And I think we will see us move into later stage, because if the IPO market remains shut, many small businesses when they IPO don't need more than $5 million. So crowd round it's an easier offer document to write. It's about you get the spread, so you actually get several thousand investors potentially, and it gives you the next round of money to get the acceleration. Mm-hmm. So I think we might stretch out for where we cover from just early stage, I think hopefully into more of that pre-IPO round as well. So there's so many use cases. I think it'll accelerate because we are open and not much else is open if you want to raise capital.
I know you mentioned cost of living. Do you think that's going to affect the investor appetite?
We saw it. Yeah, so capital markets have slowed. The consumer is also the investor, and we saw it last year. We saw the data was showing us a slowdown in dollar amounts and number of investors. But it's cyclical. So interest rates look like they'll be high for the rest of the year, but when they start coming back and people have surplus funds, and they'll go, where am I going to put my money? Where do I put my marginal dollar that I have saved? So at the moment, there's a lot of money. People are spending a lot of their savings just to meet their grocery bills, but they're still supporting our businesses. I think as any pressure on household budgets eases, I think that's when you'll see a big acceleration. But don't forget, there are the non-millennials, the baby boomers, have so much money. We can see, I saw some CBA data.
Must be nice.
It is nice. And, what are they going to do with it? Like, this is a great opportunity for intergenerational support. Don't give money to your kids to, just buy a house. Like, support your kids or support your kids' friends building businesses and building the future. Like, that's a far better use. So there's literally trillions of dollars, I think, or billions and billions of dollars of baby boomer wealth sitting in bank accounts, earning more interest than it's ever earned before.
Yeah, wow.
And so that's the investor market. It's very risk averse, but I think there's a clarion call for them to actually start to believe and support in the next generation's business. Like, you own the house, you own beach house, you may be supporting your kid buying your house. What about actually helping build the economy and actually supporting the kid, your kid's mate, who actually is trying to build a vision and actually probably going to do pretty well, because who's better educated, who's smarter and more creative than the Australian young person?
It's a nice way to look at it, isn't it?
It's a bit of hope.
Yeah, I would hope so.
But yeah, no, the truth is the baby boomer is incredibly powerful in this whole thing. But I don't know how much we are seeing from that. We certainly see the high net worths really drive a lot of our deals. Like, we know a lot of people with wealth do come and invest. Like, they may only invest 10 or 15,000, but they're able to use their wealth to get a really big portfolio. Sure. Rather than trying to get $100,000 out of a lot of people, it's a lot easier to get someone to write a $15,000 or a $10,000 check. Mm-hmm. So they are driving our business, and I think more and more are watching it. We know on our own deals just who pops up, and it's impressive. Like, you see some of Australia's wealthiest people and families backing our companies. So I think we'll see that accelerate, and that will give us leverage as well. And I think that's possibly where we'll see the real acceleration. So it won't be so sensitive to cost of living. I think it'll be more about, when are they seeing the investment opportunities they want to chase.
So you're saying the target audience, we want to go for slightly older Australians?
We want everyone.
We want everyone.
This is a community business, and we want every founder to be able to find their community across the age, sex and wealth spectrum. And our platform allows people to invest $100 sometimes. You can invest $1 million still via the sophisticated investor process as well. So we are able to bring them all together. There's nowhere else you can do that.
It's pretty huge, and I think that that's a perfect time to finish today. Thank you so much, Adam, for coming. Really appreciate your insights. I think that was really invaluable, and really love having you as chair at Birchal.
Well, love having you on the team too, Em. You're amazing, and hopefully any founders that are listening will get the real joy of the process that you lead them through. I think it's pretty impressive. So every time we seem to do it better, and we're very lucky to have you. So thanks for the chance to have a chat.
Stop it, Adam. Thanks so much, and look forward to chatting with you soon.
Thank you.